Hello and welcome to the second trading day of this week right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. As kidnappings and banditry in Nigeria continue in 2024, we count the socio-economic costs. And Kenya dairy imports from Uganda nearly triples to $210 million in 2023. Plus, gold retreats from near record high levels ahead of U.S. inflation data coming out later today. Great to have you join us. I'm Ladi Williams. Let's get the top stories that set your agenda now. We see the Standards Organization of Nigeria has unveiled 18 new standards for compressed natural gas, which is approved for road vehicles and related appliances. The Director General of SON, Ifeanyi Okeke, made this known to journalists in Abuja. The Director General of SON said the approval, which was part of the Presidential Compressed Natural Gas Initiative, according to him, the 80-approved standards cover various aspects of CNG utilization, including production, storage, transportation, and appliance compatibility. He noted that the approved standards would pave the way for safer CNG use, reduce environmental impact, and cost savings, adding that as more road vehicles and appliances transition to CNG, Nigeria can achieve clean energy security and contribute to global sustainability goals. All right, let's head to the markets now. We see the grain market. Chicago wheat futures slid today with the market facing pressure from leading importer China canceling more U.S. cargoes and plentiful world supplies. Corn lost ground while soybeans ticked higher, with both markets likely to face headwinds from expectations of near record South American production. The most active wheat contract on the Chicago Board of Trade, WV1, slid 0.1% at $5.46 for half a bushel. That's an early trade. While corn CV1, that fell 0.2% to $4.40 for three-quarters of a bushel, while soybeans, SV1 there, see 0.3% down, and wheat showing 0.1% down, $5.46 for half a bushel. Let's go to a quick check now on the metals market. Gold prices slipped from their near record high levels today as traders brace for U.S. inflation report that could give more clarity on when the Federal Reserve might start cutting interest rates. Spot gold, that fell 0.2% to $2,178 per ounce in early trade after rising for 9 consecutive sessions. The bullion hit a record peak of about $2,194. That was on Friday. And there, the last analyst I spoke to did say that we could see gold reaching that 2,200 level at some point. But palladium, that's down 1.15%, $1,030. Platinum, that's sitting at $933 per ounce, 0.78% down. That's what we see there in that market. All right, let's get a check on oil prices now. We see oil prices rose earlier today in early Asian trade, but price moves were limited as the market waited for monthly reports from oil agencies. Brent futures for May delivery rose 23 cents to $82.47 a barrel, 0.3% up. And we see WTI crude, that's the U.S. grade, that's also up 0.2%, $78.10 a barrel. So we're seeing mixed sentiments this week. We've had the first opening for the week down, but now we're seeing the market up again. Who knows what's going to happen tomorrow in that market? Well, with the challenge of rising insecurity in some parts of the country, experts have recommended ways in which heads of subnationals can attract investments into their state in order to drive their state's economy. The Chief Executive Officer of APT Securities and Fund, Kasimu Kurfi, was a guest on our Business Morning show earlier today, listed some measures that state governments can take to achieve the result. Take a listen.
We had over 280 students were kidnapped in Kaduna. During the former governor, he bring Olam, and other company that invested heavily in Kaduna. Today is a big challenge for any other company to think of coming to the Kaduna because it shows that it's not secured. These points areas are known. The security challenge, the ringleaders are known. Their location are known. Go and attack them. Don't wait for proactive until they attack you, then you start pursuing them. You will never win a situation where you stay and wait until you attack. If you look at it, Lagos has less incident of the insecurity. In fact, we hardly had any serious army robbery in Lagos for the last 3 years. And this is a plus to the Lagos. And therefore, we advise other states to also establish the same fund for the security. We need to invest heavily because once your state is secured, you get more investment. A lot are going to Kano because they have less incident of insecurity. So it is very clear to all of us that address the insecurity before you use it. And the second issue is even for the state. For the state to be at peace, they need to go. In most of the Nigerian, they are agrarian, especially up north. We have the land, we have the river, we have the dams.
And definitely kidnapping becoming an albatross in our country's development, and definitely urgent, stringent measures must be taken to curb the menace so that the multidimensional poverty afflicting Nigerians will not worsen at this time. Let's look at some data now. We see the top agrarian states in Nigeria. That's starting with Benue. We took 5. At this time, and we know Benue, the major produce there have yam, cassava, maize, and rice. We have Taraba State there with groundnuts, beans, and sorghum. We have Oyo with maize, cassava, yam, and plantain. And we see Kaduna. They have many crops there that they produce, including millets and groundnuts. And we see Niger State, rice, maize, millet, sorghum. And we've seen these top states, at this time, starting with Benue. We see the coordinator of International Fund for Agricultural Development there and Value Chain Development Program. He did confirm insecurity is hampering rice production in Benue State. Taraba, we see dry season farmers in Taraba State expressing concern over escalating insecurity in various parts of the state. And when you look at our food inflation rate, it's quite easy to tell why we're having this much inflation, because the farmers are not able to go to these farms. And with these states, this top producing top agrarian states in Nigeria being bedeviled by insecurity at this time. Let's bring in my guest now, Confidence Makari, a senior analyst at SBM Intelligence, to bring us up to speed of what's going on. Great to have you, Confidence. Hello, Confidence. All right, we'll try and get Confidence back in a bit, but also looking at major abductions in Nigeria this time, just tracking back from 2023 into the early parts of 2024, we see that more than 3,600 people have been reportedly abducted. That's in 2023, according to ICRC. Also, we see 17 women and children abducted in Katsina State in 2024 already, at this time, and gunmen kidnapping 227 pupils from school in Kaduna State right here in 2024. Let's try and get Confidence back now. Hello, Confidence. Great to have you.
Hello, Ladi. Thank you for having me once again.
Yeah, so we keep talking about, attracting FDI, getting our foreign inflows, coming in, but there's a big insecurity problem right now. Talk to me about how this is affecting FDI, or is it not having any impact?
Yeah, of course, when you have a highly volatile situation, investments are going to take a dip. And one of the reasons why investors do not seem to be keen for the Nigerian markets is because of, first of all, the places where people have to invest are high-risk areas. The program talks a lot about agriculture and tries to use agriculture as a tool to get FDI flows. But you also mentioned, I think earlier, that social debt of the country is bedeviled by a lot of frank insecurity, and it is very difficult for agriculture investors to get to their farms in state of heightened insecurity. And Benue's case is particularly unique because it is not an issue that is restricted to one particular local government area. It is at least 10 local governments out of the states that are affected. So Nigeria's problems nowadays are mostly driven by food inflation, and food inflation drives every other inflation. So most people who want to invest in the agricultural sector in Nigeria have to deal with attacks by Fulani headsmen, attacks by criminal armed groups, bandits, and the likes. These just basically raises the specter of doing business in Nigeria.
At tackling the insecurity problem at this time, do you think this government is going in the right direction when it comes to tackling this issue head on, this issue of insecurity?
I can't say. I can't veritably say, because we haven't seen any security initiative from the current administration. Much of what it has done has been to lean on what the previous administration did in terms of deployment of troops, in terms of proclamations whenever there is a mass abduction reported. The Tinubu administration has not really brought new initiatives on the ground. Of course, part of its strategies is a change of guard, but that change of guard at the start of this president not being translated into something new, because lately what we're having is basically more of the same, where the police are trying to leverage on the creation of this community groups set up by the state government, vigilante groups to take the fight to the bandits. But the structural issues remain, especially the cause of the security crisis. These things have not really been addressed, and one of the dangers of not addressing the underlying causes is that as more people fall into the poverty trap, desperation sets in, and then we're going to have a whole army of young people going into crime. So I think until the root issues are tackled and we see a strong necessity for the current administration, I don't think anything is going to change anytime soon.
And we've heard solutions like state policing, at this time. How much of an impact do you think this will have in solving this insecurity problem?
We've been seeing bits of state policing in Nigeria, at least for the better part of the last 1 year, where state governors have been setting up vigilante groups themselves. But the question now remains, in what capacity will those state policing structures that have been set up at? Is it until we get to hear from the National Assembly that, okay, this is a state police, that we will agree that, okay, this is a state police? Because I have looked at some of the recommendations for the creation of state police. And frankly, I do not see any different light on what we currently obtain, because Nigeria's political structure and Nigeria's structure is highly centralized. For state policing to work, you have to devolve it to the lowest rung of the ladder, which is community policing. And not much has been heard in that regard. Most of the recommendations of state policing still rest within the centralization of the police forces at the hands of the state governor. And most Nigerian states are multi-ethnic in nature. If you continue to concentrate policing powers on the state governor, it's just like taking the powers of the policing from the presidency and the IGP and then investing it in the state governor. It's not really going to work. It's not really going to change much. So if we are really going to get serious about state policing, we have to devolve power, policing as an institution to the lowest rung, which will mean taking policing down to the community levels and allowing the communities to be responsible for policing themselves, because anything other than that is going to be more of the same.
All right. Looking at the issue now, is this a problem we can just throw money at, at this time, and the monies that are being invested, in security, is it enough?
Yeah, we have been throwing money at the problem for quite some time. It hasn't really solved the issue. Part of the issues that bedevil Nigeria's national security is structural. Another part is economic. So, for instance, we talk a lot about policing. Yes, I do understand the fact that reforms cost money, but the sincerity that needs to go into adequate police reform, it's not there. So you can keep throwing money at the problem, say you want to hire more people, you want to get more gadgets, you want to get more weapons, but at the basic wrong, which is trust in police institutions, it's not something that money can buy. So if we are going to get serious about policing, the police needs to do everything it can to reduce the people. And apart from that, when we talk about police reform, we have to get serious about the kind of trajectory we want policing to be. The federal government threw me at the problem in different administrations that tries to hire more people. It has tried to buy weapons, especially for the military. If you look at the purchases the Nigerian Air Force has been making since at least 2019, you see that its capital expenditure has really gone up. So we now have more Air Force operations, and even the Nigerian Army began its aviation unit about 3 years ago. So we now have more bombs that are being dropped on the sky, dropped from the sky rather, on bandits, and then inadvertently being dropped on civilians at, in nearly the same proportion. It hasn't really solved the security situation. So we need to stop looking at throwing money at the problem. We need to start reform. One of them is civil military relations, civil police relations in the country, because a lot of these things is more of what the Nigerians say, in the sense that most people do not really feel a part of belonging to the state, and then as a result, we have ceded a lot of our territory to people, to terrorists in non-government spaces, and it does appear that the terrorists that are taking care of those ungoverned spaces are carrying out more governance issues than the Nigerian state in itself. So until we regain back that trust, I'm sorry, we're just going to keep throwing money at the problem without getting any useful results.
Right, and we need definitely need results, at this time. Talk to me now about welfare of security agents. How much of that is, impacting, the situation at this time? Because, when you look at funding, maybe for the police, the army, the welfare of the men and women that's supposed to protect us, at this time, we see that some of them are actually hungry. And you wonder how, a hungry man can, protect anybody.
Yeah, to be honest,
all right, Confidence. Looks like the network is not. Yeah, Confidence. Can you hear me?
There's no reason why.
All right, looks like the network is not allowing us here what Confidence has to say there. But, definitely, this issue definitely has to be tackled from all sides, for us to get a real solution, to this problem. Confidence, I don't know if you can hear me. All right, well, we've seems the network is not allowing us here, Confidence. But at the end of the day, we need to protect the country and the people at this time, because looking at these states that are heavily impacted by insecurity, we've seen Benue, and we've seen the major, output we get from these states, and definitely seeing the rate of insecurity in this state is quite worrying, at this time. And we've seen the food inflation over 30%, at this time, and that's actually, feeding more into the headline inflation and making prices rise, consistently. But definitely we've seen the central bank, make moves, raising rates, mopping up excess liquidity at this time. But I believe that the insecurity issue also needs to be tackled, headlong at this time. Anyway, after the break, we'll head straight to the markets. We'll have Anita to give us the details on what to expect for the markets and what's happening at intraday. That's the moment. Just stay with us. Welcome back. Let's head straight to the markets now. Definitely, we got a green close yesterday, and March seems to be shaping up to be looking good for the local bourse. But let's also get a sense of what's happening with other markets. We have Anita to give us the details. Great to have you, Anita. So, yeah.
Yes, good afternoon, Laddie.
Good afternoon. Not looking bad at intraday, looking at the green on the screen in most parts we track in Africa.
Yes, green is the color, and I think some of us would like the green. We have those who are bullish and then those who are bearish, especially those who want to enter. They would be on the bearish side, but those who are within would like to be on the bullish side. So it's always a tale of two swings for market investors.
Yeah, you have a choice to make at this time.
Exactly. So I'll be giving you all of that details for regional stocks across the region, across Africa, Asia, the United States, as well as for the Middle East. So now, let's take a look at the board. At intraday session, Nigeria's stock market, yes, yesterday we were at the 101,000 points But we are now back into, of course, sometime in January and later part of February, we were celebrating that 100,000 points, and then we fell back below it. But now, boom, we're back at 102,229.81 points, and at intraday, we're up by 0.18%. So for yesterday, the market gained more than $436 billion naira, and then we also had a positive market breadth of about 34 gainers against 16 losers. Month to date, the market is about 36.5%. That's for Nigeria's stock market. So, but let's move over to South Africa. South Africa, that was in the green, 0.70%, while Egypt's stock exchange is in the red, while Kenya's stock exchange closed Monday upbeat 0.65%. Now that's for that market. Now, still with Nigeria's market, financial market, but taking a look at the fixed income market, we'll be looking at the intraday trading, a bit of a review for Monday, and then the outlook for how Tuesday would be ending for the market. And then we have Nabila Mohammed, a financial market analyst at Chapel Hill Denham, to give us details about the fixed income market, particularly if you're looking at the Naira. So, Nabila, thank you for joining us. So let me start first. I think I'll start with the bonds as well as the treasury bills market. Tomorrow there's going to be another primary market auction, the second for this month. So tell us what the market is, how is performing at intraday.
So currently, since the start of this week, we have seen the market largely quiet with some sort of bearish undertone. We've seen some cherry picking, especially with the one-year treasury bills, given how attractive the yields are, and quotes are around 20% and above in terms of the yields and the market, just trying to reprice to levels to mirror the realities of the short-dated instruments and how they are trading currently. So what we're seeing are traces here and there, but nothing major because of, I think investors are just trying to keep calm and see how the auction will pan out tomorrow. But for now, it's largely quiet and with very little traces of activities here and there in the short-dated space, of course.
Okay, so that's for the fixed income market. Let's talk about the currencies market now. It's a mixed. It was a mixed close for the naira against the dollar at the Nigeria Autonomous Foreign Exchange Market. We saw the naira closing with an upbeat 0.6%, closing at 1,617. Naira 96 kobo, and then at NAFEX was mixed, it was down by 0.29% at 1,615 Naira 85 kobo, and then for the BDCs it was up by 0.19%. Now, can you give us the intraday performance of the Naira as we speak?
So the Naira is still, as we all know, undervalued. However, we are able to achieve some form of convergence. And in fact, last week, the official market rate closed above the BDC rate. And it is a positive sign, but I mean, not enough supply is there to really provide a strong appreciation in the currency. And we still see it trade at levels of 1,600, which we consider to be undervalued in our view. So what we are seeing is still around those levels. That's 1,600 currently in terms of intraday activities. Supply is still the major thing that we need to look at in the short term, of course. And of course, in the long term, we'll be looking at more the export earnings that will bolster reserves, that will enable the government to be able to defend the currency at levels that are much more lower than what we're seeing currently in the market. In fact, just to give you some form of context, last week on average, the FX turnover activity declined. So we're still seeing average levels still below pre-pandemic levels. I'm talking around $206 million in the FX market in terms of turnover, compared to the 263 million that on average that we saw pre-COVID levels. So there is still that supply that needs to increase in the market before we start to really see the real value of the currency show in the market.
Okay, all right. So now, Nabila, before I let you go, what is your outlook for the fixed income markets for Tuesday's closing session?
So we'll still see it close largely quiet. because the activities are still skewed towards what will happen in the auction tomorrow. There's still a bit of anticipation that stock rates will be much, much higher. So we'll definitely see investors wait out that particular auction to happen tomorrow. So I still expect it to be a bit quiet today as well.
Okay, right. So we'll take a look at the markets and then find out if it matches your projection. Of course, you're the trader, so we keep it there. So,
thank you.
I was Nabila Mohammed, financial market analyst at Chapel Hill, Durham, with the intraday market analysis. Now, let's go to the Middle East. The mixed sentiments is what permeated at intraday session. You see the Abu Dhabi, although I wasn't mentioned the United Arab Emirates, that's where these two stocks are, these two exchanges are. The Abu Dhabi was up 0.04%. The Dubai FM in the red, 0.38%. On the other side of the region, where Saudi Arabia is also in the green, so we see it up by 0.43%, while at intraday, the Qatari Stock Exchange was unchanged at 10,190.65 at intraday trading session. Now let's move over to the world's biggest economy, the United States, where it's mostly positive except for the Dow Jones Industrial Average Futures before the market opens at about 2:30 Nigerian time. So it was in the red, 0.05%. Of course, those numbers, they would oscillate, but currently at 39,210 points, while we see the S&P 500, that's where the index that tracks the 500 largest companies on the United States, it was up in the 0.24 region, while NASDAQ was also up 0.46%. Now, these indexes, they're moving this way because investors are looking out for the U.S. inflation numbers, which is expected to be, as we speak, to be out by 1:30 p.m., 8:30 a.m. Eastern time, but 1:30 p.m. Local time. So the economists are already polling that the monthly gain of that the inflation will come in at about 0.43% and that's month on month, and 3.1% year on year for the headline inflation. Now let's move over to Asia, where we see major indexes close in mixed territory. Starting first with the Nikkei. The Nikkei, it extended the loss which it's had on Monday, still within it has gone below the 40,000 level, but of course, this is also coming as the country's corporate inflation rate for February had increased to by about 0.6%, beating an estimate of 0.5%, which was expected by economists, and then also climbing from the generous figure of 0.2%. So that's it for that market. Now, for the South Korea's Kospi index, we see it in the uptrend, 0.83%, while the Hang Seng index for Hong Kong is up by 1.43%. Let's move over to the other side of that, the Asian market region. Shanghai in the red, while Australia's ASX 200 in the green, 0.11%. Now let's get back to the equities market analysis, where we'll be joining Peter Abe, equity trader at Stanbic IBTC Stockbrokers, to give us details about the Nigeria stock market intraday trading session. Thank you for joining us, Peter.
Thank you for having me.
Okay, now we see our numbers. Our numbers is going back into higher territory, more than 100,000 points. We've dusted all that, 56, 60, 70, 90,000. Now, can you tell us how the market is moving as we speak?
Well, at now, we saw the ASI has gained, the on-share index has gained, and that could be attributed to some gains in the banks, likes of UBA, Access Bank. They are all lifted to their high of the day, and also MTN as well. This contributed to the gains in the market. So we are seeing positive sentiments, buying interest in the banks. I think the intention, the expectation is that the bank results will be released very soon, very probably this week or next week. And also after MTN had lost for almost like a week, we started seeing the buying interest back into their names. So these are the names that have contributed to the gains to the market at the moment.
Okay, so for yesterday, we saw mostly a positive sectoral performance, except for the oil and gas sector, which was down by about 0.2%, and that was the lone loser for the day. But at the moment, what is the sector that is really driving, and what is your take? What is your outlook for the market's close for the day?
Well, like I mentioned, the telecommunication is one driving the markets at the moment. Banks are also doing very well. But I mean, I'm not sure we are seeing the same sentiments in the industrial and consumer names. So, I mean, we just have about 1 hour to close the market. I think banks will still continue to drive activities. Like I said, MTN is on full bid now. Some banks also on full bid. So I think we'll continue to see this buying interest here. And also, as more numbers are released, I think it's all other sectors in the market.
Okay, so now we have a lot of investors trying to come into the market. Some of them do not really have this investor education. So what would be your advice for any intending investor, those who are maybe like the Gen Zs, the younger investors? What would be your advice for them coming into the Nigerian stock market?
The Nigerian stock market has made it easier for all ages to participate in the market, and that's why if you have the apps, your broker, you have the app, which everybody can play with, and you can also get familiarized with how trading is being done. So I think it's a challenge being thrown out to every age, Gen Z or whatever the age generation is. We can play with the app. If you want to play on the app, we also have the internet-based trading. You can as well play on that. I think we have so many platforms these days that investors can actually interact with the market, and as well engage your broker, ask more information, study the trends. And I think we have more opportunities in the market these days.
Okay, Dr. Peter, so we'll leave it there. I'm glad you've given that piece of information for intending investors in the Nigerian stock market. And of course, for stock markets around the world, the same rule applies. So thank you so much for that analysis and your investment advice.
Thank you for having me.
Yeah. That was Dr. Peter Abe, equity trader at Stanbic IPTC Stockbroker. So, Ladi, I don't know what your investment tips would be, but right. I'm sure it will be in line with Dr. Peter's.
My tip is find the bottom and sell the top. It's not the easiest thing, but you have to do that. And you have to get as much advice as you can. But going by what he said, about the intraday play, at this time, we're seeing it looks like the banks are actually back at this time. We're seeing some banks like Access there, adding to their share price.
That was one of the fugas, what we call the fugas.
Exactly, one of the fugas. So it looks like it might be a green close. At the end, just about an hour or so.
And you'll be the one to tell us how the market ended.
I'll be right there. Thank you so much.
Pleasure.
Anita, for the details. All right, let's take it on to the UK. Now we have some migration issues. Right now, Juliana joins us from our London studio. Great to have you, Juliana. So we see the UK there banning international healthcare workers from bringing in dependents. What are you hearing about this?
Good afternoon, Laddie. Yes, unfortunately, the appeal, should we say the aspiration for overseas workers to come into the UK is waning. And that's because yesterday, of course, there was the announcement that effective immediately, there will be a ban on anybody coming into the UK with a healthcare or social care visa from bringing in their dependents. And I've got to tell you, just checking the temperature of social media yesterday and today, it does show that there is a massive backlash, not just, of course, from Nigerians, but I've got to say from people in the UK as well who just don't understand why the Home Office have made such a strict decision. This all comes back really to the Conservative government's 2019 manifesto pledge, and really at the centre of that pledge was about reducing migration. We know that that is a cornerstone of the Conservative government. Stop the Boats was one of Rishi Sunak's 2023 New Year pledges, and that's exactly what they want to do, and they are heading that way. I believe it was in December 2023 that the Home Secretary, James Cleverly, announced that there would be a new 5-point plan to bring down net migration. I believe it currently stands at about 660,000. The British government want that to come down to about 300,000. And they found some areas that they believe are being exploited, shall we say, by workers. Now, according to the data that they compiled in November, it does show that one of the easiest ways for foreign workers to bring in their dependents was the health and social care route, which is why they've specifically targeted that visa. So basically what it means is from March the 11th, which was yesterday, if you are applying for a health or social care visa in the UK, you can do so, but you will not be able to bring your children, your spouse, or indeed your parents with you. And I said this is having a big backlash because we know from what happened during COVID-19 that the care system in the UK is not only underfunded, it is not really working. I think they have over 150,000 vacancies. We know, just having a look at any care home in the UK, the vast majority of people in this country who are looking after the elderly or vulnerable are Nigerians, and it isn't the best or the easiest of jobs. In fact, there are so many cases every single month. There is one case or another about somebody being sent to prison for mistreating the elderly. It is a very, very difficult job, and you've got to have a lot of patience. So there's so much confusion as to why a job that nobody wants to do in this country, you would stop people from bringing in their dependents. And basically what the British government and James Cleverly is saying is, you can look after our elderly, but you can't look after your youth. So it's a huge issue. Of course, it's caused lots of anxiety in Nigeria because the rules are not that clear at the moment. From what I've read, and I've gone through an extensive amount of reading today, it does appear that this is not a retrospective law. It's not a piece of legislation that's looking back. So if you are watching us from the UK, you work in the health or social care sector and you have your loved ones with you, you should be safe. And if you are watching from Nigeria and you have already applied for a visa which has been successful, you should be able to still bring your dependents. It only comes into force on the 11th of March, which is yesterday. But certainly, I think there are so many questions for the British government, and we only hope that our Minister of Foreign Affairs and indeed even the President, when he is embarking on these foreign tours, the discussion on migration has to be at the top of the list, because it is unfair that Nigerians seem to be targeted when they contribute so much to the UK economy. So this is a developing story, but as of now, if you are somebody working within the healthcare or social care sector and you want to come into the UK, you will not be able to bring your children or family members with you, which is shocking, to say the least.
Quite sad that you have to do the job all alone, at this time without your family actually close. It was a developing story. We'll keep tracking it. But we had some data out in the UK earlier talking about jobs, at this time. And is there any chatter how this will impact the BOE rate decision? Because we're seeing the job market looking quite cool in the UK.
Yeah, you're absolutely right. The job market is cooling, according to data that was released this morning for the Office for National Statistics. In fact, it shows that unemployment in this country has risen for the first time since the summer. It was 3.8% in the 3 months to the end of last year. Now, to the 3 months to the end of January, it's picked up to about 3.9%. In fact, separate data also shows that wage growth is also slowing. Wage growth minus bonuses. I think that's year on year up to 5.6%. It was 5.8%. So there is still some growth, but it's slowing. So yes, of course, lots of attention now is on the Bank of England and its governor, specifically Andrew Bailey, because every time they come out of the Monetary Policy Committee gathering, they're always talking about the labour market data. And there were some concerns that perhaps wages could outstrip inflation. It still is, because inflation is currently at 4%. But of course, we're all waiting to see when interest rates are finally going to dip. They're at record highs at the moment. There had been fears about reducing them to see whether or not the labour market would be cooling, but it does appear to be cooling. And I think tomorrow we'll have further indication of perhaps what the Bank of England will do next, because we've got all important GDP figures for the month of January. Of course, the UK at the moment is in a technical recession. So the fact that unemployment has risen and wage growth is slowing, I think is just a broader aspect of the UK economy at the moment.
Right, and I guess investors just want to know when the rate cuts are going to come. I guess we'll find out, sometime. But how are the markets reacting?
The markets are in tip-top shape at intraday. I think, as you were saying, Laddie, I think there's now interest in the Bank of England. Are we going to hike, or should we say lower interest rates? I don't think we're going to be getting that at the next MPC meeting, but certainly it appears as if we are heading in that direction, and the markets have reacted. The all share is up. It's up 0.85% at intraday. The UK blue chip index of FTSE 100, that's up by 0.95% at intraday, and the FTSE 250 is up 0.34%. In the currencies market, the British pound has actually been doing pretty well against the US dollar over the past few weeks. In fact, I think it's up at a 7-month high, but it's currently down, though, slightly against the US dollar by 0.21%, down 2 against the euro by 0.21%, and the British pound is trading up against the Japanese yen by 0.29% at intraday, Laddie.
All right, definitely not a bad picture there of the UK markets. Thank you so much for the update, Juliana. All right, let's get a sense of what's happening in Europe now. And definitely Bitcoin getting a lot of attention. At this time, we see the digital currency has stunned investors after passing a record 72,000, and it keeps rising. Joining us now is DW correspondent Emily Leshner in Berlin. Great to have you, Emily. So how is Europe looking at Bitcoin's fast rise?
Hi, thanks for having me. Yes, this jump is quite a significant one. It's a 300% increase compared to November of 2022. And one of the major reasons for this is that the U.S. Securities and Exchange Commission, they approved Bitcoin to be traded in what's known as Bitcoin Spot Exchange Traded Funds, or Bitcoin ETFs. Now, the SEC had resisted approval for around a decade because of concerns of extreme volatility in the crypto market. But eventually they approved it after a pivotal court case last year in Washington. An asset manager known as Grayscale had challenged the SEC in federal appeals court after it was denied permission to approve ETFs that included Bitcoin. And Grayscale won, and the SEC was forced to let it create an ETF that included the cryptocurrency, which paved the way for other asset managers to follow suit. And now there are around 11 ETFs with Bitcoin included in them.
All right, what does regulation look like there?
Well, yeah, the European Union was the first to pass a comprehensive package of laws to regulate the crypto industry all the way back in May of last year. The framework is known as Markets and Crypto Assets Regulation, or MiCA for short, and it aims to do two key things. One is to make it harder to use cryptocurrency to get around anti-money laundering laws, and this is primarily by requiring crypto exchanges to collect information on both the sender and the beneficiary, no matter how small the amount. And the other is to protect investors from some of the risks that we typically associate with crypto assets and crypto trading, like making providers liable to their customers in the case that the assets are lost or somehow stolen. And providers also have to build a liquid reserve to back the currency. And finally, the stablecoins will be supervised by the European Banking Authority. Now, MiCA doesn't go into full effect until December of this year, but though some of the stricter policies have made crypto firms a little bit nervous, the regulation is generally considered within the industry to be a positive move because regulation within the EU is going to reduce fragmentation and it's going to allow bigger crypto companies to move into the European crypto space.
All right, Emily, talk to me about what's happening in markets today in Europe.
Well, investors are keeping an eye on inflation numbers to come out of the U.S. today, which could play a role in the Federal Reserve's decision-making on cutting interest rates. And they're also paying close attention to the Bank of Japan's policy meeting that will take place next week because there's growing speculation that it could end its negative interest rate policy.
All right, thank you so much, Emily Lashner there with DW in Berlin. Thank you. All right, let's get a check on other markets. Now we see Sovereign Africa Ratings has affirmed its BBBB long-term and B-plus short-term issuer credit ratings on the South African government, while the outlook on local currency ratings remains stable. Foreign currency ratings are assigned a negative outlook. SAR is expanding its operations to Ghana and Kenya, aiming to become an alternative player on the African continent. The agency focuses on regional and municipal governments as well as insurance offerings, identifying a niche in these markets. Our South Africa correspondent Innocent Somosa reports.
Rating agencies play a role in guiding informed investment decisions by independently assessing the creditworthiness and risk of entities like governments, corporations, and financial instruments. I had the privilege of speaking with the CEO of Sovereign Africa Ratings, Mr. Zwelibanzi Mazia. The agency affirms South Africa's credit ratings. He shed some light on the challenges confronting sub-Saharan Africa economies.
So I think it's a matter of the policy effectiveness as well as the limitation of effective interference from the political side. So if an institution is supposed to be independent, it should be viewed as such. It should be clear that the decisions made by certain institutions are made independently in the best interest of the economy and the population.
Mazia also discussed recent trends and developments in Africa that investors should be aware of.
There are various developments happening in Africa. There's been a lot of exploration and discoveries of natural resources, including Mozambique with their oil, with natural gas, actually. So it's quite extensive. And as well as countries like Namibia, Kenya, who also have discovered oil and gas as well. So now it's really up to the countries on how they manage these resources, especially when it comes to beneficiation. Take for instance with Nigeria, recently they established Dangote oil refinery, which is quite a feat in comparison to countries that tend to stay in the primary sector exporting their raw materials.
The landscape for sovereign credit ratings agencies in Africa is evolving rapidly, presenting both challenges and opportunities. Sovereign Africa Ratings says one of the biggest challenges is maintaining independence and objectivity in ratings amidst political pressures and vested interests. From Midrand, Johannesburg, Innocent Somosa, Channels Television News.
All right, thank you, Somosa. Well, let's head to other markets now, talking about the crypto market. And we did get that data from companies Market cap says gold there. That's the number one asset, globally in the world right now. Worth about $14.64 trillion. That's the market cap for gold right now. Then we're seeing Bitcoin coming in 8th position, flipping silver just recently now at $1.42 trillion. That's for Bitcoin. But in between Bitcoin and gold, you have the likes of Facebook, Nvidia, and Apple, and all those other big ones. Then we have silver there at $1.38 trillion. So that's how it's looking for the top assets, by market cap globally. Let's bring in, I guess, now Emmanuel Anyasi, crypto influencer. Great to have you, Emmanuel.
Yeah, thank you, Ladi, again for being here once again.
Yeah, fantastic. So we're seeing new high with Bitcoin and also flipping, silver right now. Did you expect this will happen, so soon? And what are you seeing? Is Bitcoin at some point aiming for the top, for the crown that gold is holding right now?
Well, it might not be so soon as people might actually expect it to be, but it will actually get there because at this current state, the moment Bitcoin actually flipped all-time high, the only thing is for price discovery, and which is actually that is what actually currently doing now. So I think we might actually see, not by speculation, but we might actually see 80K, and probably depending on the wave the crypto market is making and the Bitcoin and all that, we actually see 100K or so. If you could remember, was it like 2 weeks or 3 weeks ago when I actually said when we are at 40-something K, I say we can see Bitcoin actually go to as high as all-time high, because if you look at the trend, if you look at the charts, you discover that it's all be good news for Bitcoin all the way. It's all be good news from the time the ETF was actually passed and all that. It's all be good news for Bitcoin. And most of the people who are actually holding it, people like Michael Seller and all that, they're actually in it for a long term. They are not actually selling the bag or anything like that. So we should see more upside for Bitcoin.
Talking about upside for Bitcoin at this time, what do you think could be the nearest risk for this rise that we're seeing in Bitcoin?
Nearest risk, ask out, please. Can you refer?
Like, what kind of risk do you see that could stop this rise for Bitcoin?
Well, I can't actually say, because now they've given Bitcoin investors to go ahead with the passing of the ETF and all that. So I don't see any risks that will actually pose for Bitcoin per se. Or maybe if another Luna crashed or another FTS actually failed. But I think the industry has actually learned a lesson with what actually happened in 2023. So in 2022, 2023. So I think we should see good high for we should see good high before Bitcoin can actually retrace. People can take profits or something like that.
Yeah, because definitely nothing goes up, forever, and you don't want you don't want a situation where the market, that's Mr. Market, takes all the profit, all the unrealized profit that you think you have, at this time. So talk to me about the best strategy to navigate this market right now.
Well, I've been calling people attention to Bitcoin when it was actually low. I think this thing actually happened every bull market. During bull market, people want to actually FOMO into the market and all that. But the truth is, I don't actually have any advice for anybody at this point, because at this point it's just price discovery. It's not about technical analysis. It's just fundamentally driven at this particular moment now. It's just fundamentally driven. So as the news keep coming up, I think Bitcoin will continue to rise. Maybe at some point people will decide to, okay, this is where my greed will take me to, let me stop and take cash out some funds and move it to other sector, probably stock or other stuff. So
would you say it's time to take profit?
No, you can't take profit at price discovery, right? I don't know, if you are in deep profit, you can actually just cut some parts. But in price discovery, you have to allow it to actually get to a particular height that people will say, okay, you can actually see it. It shows on the chart that this is, at least we can actually get a retrace back here. But look at Bitcoin opening on Monday, and he broke 70K again. That is to show you that it's actually doing very, very well, because most Monday market are actually very bad for some commodities like Bitcoin and all that. But it's actually opening positive on Monday and actually rallying over 70K, currently around 71,800 or so. It's actually a good thing. That is to show you that this week we shall actually close green on the weekly candle, and probably next week, let's just see how it goes.
So much, Emmanuel, and I say still early days at this point. We'll keep tracking to see how high Bitcoin can go at this time. Thank you so much for joining us.
Yeah, thank you, Ladi.
All right, let's get a quick check on the sentiment in the market right now. Definitely, when we track the Fear Greed Index, it tells you how greedy investors feel right now in the market, and we're at 81 points over 100. That is extreme greed, and we know how some investors like to use this index. They like to buy when the market is fearful, and they like to take profit when the market is really greedy. So the choice is up to you at this point. That's the show. Thank you so much for watching. Remember, you can visit channelscv.com for more updates. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.